here we begin with the revision classes for all the final taxation students, and the topic for today is first topic in international taxation, which we are taking right now is DTAA. International taxation is very scoring. Majorly, it is covering 30 marks, though it is 4 and 70 marks is your direct tax. But if you see the choice and options, it comes for more than 45 marks and 45 marks with choice, of course. And in 30 marks, it is like divided into two questions of transfer pricing, one question of DTAA, what we are doing right now, along with MCQs, and two very nice questions from your non-resident. Equalization levies there, tonnage taxes there. These are very small topics. Okay. So this covers up all your international taxation. The first one we are starting right now is DTAA, Double Taxation Avoidance Agreement, is the exam which is lined up now, upcoming chapter-wise exam, right? And for appeals and revisions, upcoming Saturday, we'll be discussing all the papers. Chalo, now. See, when you watch the revision video, and yeah, today on the insistence of the students, I'll take some of the problems also, which are there in our material. So pause the video, take the screenshot of the problem. I will discuss the answer. It's not possible to solve, otherwise this will go on like a regular class only for hours. But I will share the solution and how to do it. Okay. So DTAA, we are revising along with question and answers. So take good notes and understand the concept. It's one of the easiest topic. Okay, right? Now, what is the base for this topic is the name of the topic is DTAA. That is Double Taxation Avoidance Agreement. We know that when I am in India, okay, right, I am paying tax. If I'm a resident in India, I'm paying tax on world income because I'm a resident and ordinary resident in India. Okay. But then I went to Africa and there I gave lectures, though I didn't go physically, but online I gave lectures of ratio analysis and lot of things I taught to group of students. Okay. So these lectures and then the terms of taxation like this, I took sessions for them and they paid me over there. That income is taxable in that country. So I have to pay the tax on my lecture incomes in Africa on the basis of source. And same income is taxable in India on the basis of residence. Because you remember those three columns we have done in residential status. If you are a resident and ordinary resident, it was yes, yes, yes. All the income is taxable. Received in India, accrued in India, deemed to accrue, deemed to receive, business connection in India, out of India, kahin bhi rehne do. So many times the income are doubly taxed. Same thing happens from the non-resident. For example, IPL players, they are paying tax in their own country, Australia or wherever they are, because they are the permanent resident of that country. But if they have come and played IPL here, whatever they have earned in India, we are deducting TDS and paying. So many times it happens that because the businesses are done globally, we are ending up paying tax in the source country also. And then if we are a resident and ordinary resident, here also we need to pay tax. Now, promise, we all said like from the basics that no income should be taxed twice. कोई भी income दो बार तो tax नहीं होनी चाहिए, right? So that's why more than 100 countries, India is having a treaty, an agreement. Chalo, let us sit on a table across. Let us decide what income you are going to tax, and lot of understanding between the two countries. And this is everything is in writing. So suppose if we have agreement with that country, then what the residence country will do, generally they will sacrifice. Okay, Dipti Chheda, on source basis you have paid the tax in Africa, no? On this income, don't pay the tax in India. Okay, this kind of talk is called as bilateral relief. Bilateral relief. Whenever you pay tax in foreign countries, you get any of the relief. Bilateral relief or unilateral relief. Bilateral relief is relief wherein there is an agreement between two countries and we decide that those income on which you have paid tax outside the country, that income should be totally exempt in India. It's called tax exemption method, and that's a kind of relief under section 90 or 90A, applicable when I am having a bilateral agreement with your country. Or if not tax exemption, tax credit method. Okay, this income and Africa income and world income should be taxed, and then whatever tax I have paid in foreign country, that much is reduced, straight reduced. Now what are the rules to reduce the foreign tax credit, the document and all that I will tell you, right? So two things I have told you. If there is a bilateral agreement, two options are tax exemption method. Whatever income you have earned in foreign country and you have paid tax, वो income ही मत लो, छोड़ दो. Another is take all the income in India and there and all, and then whatever tax I have paid in foreign country, directly I will get the relief. This is possible when we have agreement with those countries. Suppose we are not having any agreement with the another country, then this is called as unilateral relief. Unilateral relief. Now, what do you mean by unilateral relief? Unilateral relief is especially for those countries where we don't have DTAA. तो उनसे तो कुछ expect करना गलत है. But then I am resident and ordinary resident of India, Hyderabad. Let me pay the tax. पूरा world का income यहाँ पे calculate कर लो and calculate tax on that. All Indian income, foreign income, all. Then calculate average rate of tax. What is average rate of tax? The final tax. Tax plus surcharge plus ESS मिला के. What is the final rate of tax I'm paying? Divide by the total income in India, outside India. And when I'm taking total income, suppose if I have received royalty outside India and I'm giving some deductions, okay, then net income, taxable income in India I have to take. So what is average rate of tax? Total tax, final tax, divide by total income into 100. So average rate of tax in India is coming to 12%. Now out of this total income, one income I have received from foreign country where I have paid tax 20%. So average rate of tax in India, average rate of tax in foreign country, whichever is lower, we will give the relief, unilateral relief on our own, because we don't want the SSC to pay tax in two countries. So when we will do this, when there is no agreement. Ma'am, exam में कैसे पता चलेगा? Nothing given, it's a unilateral. If they say no agreement is there, कुछ नहीं है, तो unilateral relief के हिसाब से 99% of the practical questions of this chapter are solved. One time they gave, chalo, give both the options. So we have that problem also. I hope you all are following. I'm like doing it in a different way, and I'm not revising or sharing with all of you yet my material, my handwritten notes. ऐसे ही orally हम बात कर रहे हैं DTA की. Any doubt you have, please comment below the video and join our Telegram group wherein directly you can interact with me. Click the photo, send in the group, will surely clear it with a voice note. Telegram link description is given. Okay. Those who wish to buy only the international taxation lectures, just download the app and see how the videos are. You will surely get a lot of benefit at the best prices and very quality good recording with all hard copy, courier charges all included. That's all detail in the this. Okay. Yeah. And for those who wish to continue this knowledge series with us for each and every topic, top 50 theory questions, MCQs, the paper pattern for 2016 and 22 syllabus, and whoever old new sabke liye, then do subscribe to the channel. Chalo, now what I want to say is, let us first read the concept from the material and then we will take up some problems also. Okay, right? So here I begin to share my screen. Yes. Double taxation avoidance agreement. Yeah. So by which method you have to solve the problems in exam? Bilateral. Double taxation avoidance agreement. You need to pay tax in some countries on the basis of source, and in some countries on the basis of residence. Generally residence rule wale sacrifice karte hain, right? Okay. So if there is bilateral agreement, then relief is given under 90 and 90A. 90 and 90A में exemption method कि whatever income is taxed on the source basis, resident country gives up it right कि ये income और ये tax का कुछ नहीं करना, वहां भर दिया ना, बस छोड़ दो. Tax credit method is whatever tax you pay in India and in foreign countries, just calculate the total income, and whatever tax you've paid in foreign country, directly take the credit, whichever is least wala nahi. So bilateral relief is of two methods, exemption method and tax credit. Detailed I have given these methods, but zarat nahi hai aapko yahi do पूछते हैं exam में. Now if there is no what do you call as no double taxation avoidance agreement, then what kind of relief will give? 21 relief in 21 के लिए यहाँ पे मैंने बहुत अच्छे steps दिए हैं. Let us read that. ये problem solve करने के लिए आपको यही याद करना पड़ेगा. Compute the total income including the foreign income with which no DTA. पूरा on total income. Calculate the income tax payable. Add surcharge, ECESS, minus rebate, whatever. Calculate average rate of tax. Is your final income and final tax and final income. When you take final income, here I always make you write minus the deductions. So many times the residents are eligible for deductions. No? If I'm a resident, an ordinary resident of India, and I have earned royalty from foreign country, I'm eligible for deductions. Just in the 5 minutes, I'll discuss what all deductions from your intermaterial you should know. So net income. So what is average rate of tax? Final tax. Divide by your total income into 100. When I take total income, I take care of all the deductions also. Compute the average rate of tax in the foreign country. Okay, right. Now compare the step 4. Okay, average rate of tax in the foreign country. And step 5 is average rate of tax in India. Sorry, this is 4th step. Average rate of tax in India or foreign country. Whichever is lower, that much relief you will give from the foreign income tax. From the foreign income tax. ठीक है? चल. Chal. So this is the way you have to give unilateral relief. And bilateral relief is direct, I will tell you. Now, you know, always it is said that, okay, so are the two methods clear to you? Once again, I want to repeat before we go ahead. If there is a bilateral agreement between two countries, then the relief will be given under section 90 and 90A. That is the straight exemption or straight pura credit. Unilateral relief, that is average rate of tax or whichever is lower, that will be given only when there is no DTAA. Okay, right. Now see, you know, generally it is said that if there is a difference of opinion between Act and DTAA, so whatever is beneficial to SSE is done, and in that case, DTA will prevail over the Act. But so many times GAR is applicable, General Anti-Avoidance Rules, wherein this kind of agreement is not permissible and all. Okay, then if GAR is applicable, in that case DTAA से भी override होगा GAR. So फिर से I will tell you, on Act DTAA will override, on DTAA GAR will override. Okay, so this is a point explained here. आएगा भी आगे. Next thing is theory question. Sometimes it is asked what are the benefits or what are the purpose or what are the objectives of having a double taxation avoidance agreement. So it is granting of relief. If we have an agreement, one country will tax, another will give relief to avoid double taxation. same income should not be taxed in two countries, and to exchange the information. Someone from India, Nirav Modi, and he ran away and he's in some other country. We can ask those countries to help us to recover all the information and money from the Indian taxpayer. So a lot of information exchange ke liye it is helpful, and it will also help for recovery of the tax, sharing of information, avoid the tax, and granting of relief. These are the four purposes. Okay, right. Now terms, as I said, terms which are defined in the agreement, double taxation avoidance agreement, go as per agreement. If terms are not defined as per agreement, then give it the meaning of income tax act. And terms are not defined as per agreement and act, then if some notification is there, go according to that. This is like out of the way, they can ask you some kind of question. See, this is very nice, where DTA has been notified by government for granting the relief and all. Then in relation to SSC to whom such agreement applies, provisions of act shall apply to the extent they are more beneficial to SSC. So when we already have an agreement, then whatever provisions are more beneficial to SSC apply. But we all know, one second, huh? But we all know that wherever double taxation avoidance agreement is there, for Indian company, what is the highest tax rate? 30%. For foreign company, what is the tax rate? 40%. Surcharge rate for foreign companies is 2% and 5%. Indian companies 7 and 12%. Now, can we say this is a foreign company, they have to pay tax in India, but whichever is beneficial to SSC के लिए तो 30% कम है ना, तो 30% charge करते हैं. ऐसे नहीं होता है. Are you getting? So what I want to say is, in double taxation avoidance agreement, it's true that whichever provisions are beneficial for SSC you apply. But in case of foreign company, tax rate to be applied will be 40% only. If 40% is not considered less beneficial. Charge of tax in respect of company at a higher rate than a domestic company shall not be regarded as less favorable. So foreign company have to pay the tax at 40%, and provisions of GAR will prevail DTA. Okay? आप बोलोगे मैम गार तो बेनिफिशियल नहीं है ना एसएससी के लिए, वो तो सब इम्परमिसिबल बता रहा है, तो हम डीटीए जाएंगे. ऐसा नहीं होता है. DTA cannot override GAR. Okay, right. So next, one more question they can ask is, suppose you want to get a relief under 1990A or 91, then if someone is not a resident of India, he is not having the PAN card and other details, he should get a document called as tax residence certificate. In his home country, whatever are the details are there, that he has to submit to get all the kind of exemptions, full exemptions and partial exemption or whatever. And the SSC should give other details like what is the status, individual, company, firm kya hai, nationality, SSC's TIN identification number in his home country. Like in India, we are giving PAN card. We can't say to non-resident, pehle PAN card lao, fir aage karenge. No, non-resident, you can't force to have a PAN card, but he can give his identity in his home country, whatever it may be, that laminated card copies and all. Period for which residential status as mentioned in TRC certificate, his proper address and all. If all these documents are submitted, he will get a relief. Okay, right. Now, steps I have already told you, dear students. Yeah, there's a term called as FTC in brief and foreign tax credit. I'm completing all the theory. Please wait. And then in the end, I will show you how to work out the problems when you get a relief from one country. And once until now, but a very nice 8 marks problem is asked. If you get relief from more than 2-3 countries, can you combine and take? Answer is no. Country wise, we will take the relief. ठीक है ना? चलो. So what is foreign tax credit? Now, whatever tax I have paid in foreign country, I want to take it as a credit in India because we have a bilateral agreement. और वहां की इनकम पे जो भी मैंने टैक्स किया है मुझे यहाँ माइनस मिलेगा. Yes. So foreign tax credit is allowed subject to these documents, what I told you now, TRC, tax residence certificate, and with certain conditions. Okay. So foreign tax credit is allowed over the period over which income is taxable. Okay. Right. So suppose if the foreign tax has been taxable in, foreign income is taxable in India in more than 1 year. Suppose from foreign country you are getting royalty 8 lakhs, but right now received in India is 6 lakhs. 2 lakh is received next year. So related tax also you can take the credit in 2 years. Is this point clear to you? If foreign tax has been deducted, is offered to tax in more than 1 year, then year of credit, foreign tax का जो credit आप लेना चाहते हैं, that also you can take it in the same proportion. Foreign tax credit shall be available against tax, surcharge and ECESS, not against interest, fee and penalty. You know, in India we pay 234 ABC interest, penalty भी लगती है 234 H and F, and all different kind of penalties are there. So whatever foreign tax you have paid, you can adjust it against the tax, surcharge and cess in India, not against anything else. इसके अलावा कहीं कोई एडजस्ट नहीं होगा. ठीक है? Right? Now, credit on disputed tax. If the tax is disputed, we will wait, and when it is proved that this foreign tax credit is settled and proof is there, then you can take. Okay, right. If foreign tax credit is more, tax in India is 10 rupees, final tax. Foreign tax credit is 13. So how much you will set off? 10. Can you ask for a refund? No, dear students. You cannot get a refund of the excess foreign credit. 3 rupees will lapse and the tax 10 rupees will be adjusted and this will become nil. Okay. Credit shall be lower of the tax payable, that is 10 rupees, and the foreign tax paid 13. Okay. If foreign tax exceeds the amount of this for relief, such excess shall be ignored. The credit shall be determined by conversion of currency of payment. Yeah. Foreign tax you are paying in dollars, in pounds, in yens. So you need to convert it into currency, Indian currency, at the TT buying rate, you know, currency transaction rate, on the last day of the month, immediately preceding the month in which tax has been paid. Last day of the month, immediately preceding the month in which tax is paid. जब वो tax foreign country में pay किया, with before that, if you have paid the tax in foreign country, say in March, so last day of the February, what is the buying rate? That too as per the RBI. You know, so many times the buying, selling and average rates are given by the foreign dealers associations and all. No, RBI by the bank, that only you have to take. Foreign tax credit is allowed to be set off in MAT. For this, refer our MAT lecture. जब MAT set off करते हैं ना, your regular tax minus the MAT credit, 15 years तक you set off. So if there is a foreign tax, in that also the credit is adjusted, whichever is lower. For that one example I have given in the MAT, you refer over there. Okay. So with this, we have completed the major concept. These are all very nice theory questions, that what all tax residence documents they have to give and all. Okay. Now, before going on to the practical questions, two more simple theory concept over here is, one is the concept of P. P is foreign company having place of establishment in India in the form of branch, factory, workshop, sales outlet, warehouse and all. The foreign companies having all this in India. Okay, right? Then they have to pay tax in India, whatever they are earning through P. Okay, right? See, this concept of P is connected a lot with business connection. So first you see this flowchart. In case of non-resident, if you want to tax according to DTAA, or if some income is governed with DTAA, then that non-resident should pay the tax on whatever income it has earned in India through the P. So many times they just come to India to buy, and then take it to their home country and they sell it over there, will they have to pay tax in India? No. So, non-resident who's covered in DTAA will pay tax on income earned in India only if they have P. And if they are not covered by DTAA, then according to Income Tax Act, Section 9, whenever they have business connection with India, they pay tax. What kind of business connection? Right? They have, that is business connection means, again, if they are getting income through India, then they have to pay tax. And this DTAA, and there will be not be any income deemed to have PE merely by an enterprise shall not be deemed to have a PE merely by reason. Just by having a display or storage doesn't mean you are earning income in India or maintaining a godown. I said you buy from India and you are selling in the world. So just if there is a stock from here, okay, then that doesn't mean this is all sold here. Maintenance of stock for the purpose of another enterprise, fixed place of business just for purchase. You just come to India, buy and take it to your home country, and there you are selling from wahan se world mein. Huh? So a fixed place for purpose of advertising, research, R&D and all doesn't mean that P is having income in India. Okay. So this is one thing. Same with business process outsourcing. BPOs. BPOs also, if they have connection with India, if they have P in India, then only they will pay the tax. It is possible that non-resident may have a business connection in India. In such case, the resident Indian entity would be treated as P of the non-resident. And non-resident will be liable to pay tax in BPO only if this agent is working only for this uh, you know this foreign company. Tabhi that relationship is established and the agent should pay tax on behalf of foreign company. But I am a resident, an ordinary resident of Hyderabad, and I am acting as an agent for 50 foreign companies. I am to paying tax on my income. Foreign companies ki income can pay. Why should I pay tax? Followed or not? Hmm? So the non-resident or the foreign company is treated as having P in India if non-resident carries on business through branches and all, who habitually exercises or concludes their transactions in India. Okay, then only they will pay the tax. Okay. Let us take up this eighth problem, which is I think covering up both the options. देखो एक प्रॉब्लम देखेंगे, स्क्रीनशॉट ले लो आप इसका पॉज करके, and I will explain you how to solve the problems with step. During previous year 20 to 23, Miss Ruku, a citizen of India, is a resident of both India and foreign country with which India has a DTA, which provides that income would be taxable in the country where it is earned and not other country, but would be excuse me, included for the computation of tax rate. So what is her income? 3,25,000 from India, 7 lakh from foreign country. Foreign country, the tax paid is 20%. During the year, she has paid 32,000 premium for her mother, who is a non-resident. So for though premium allowed for senior citizen aged 82 years is 50,000, but for non-residents, no seniority benefits are allowed. Take a pause and tell me something very basic, all of you. From here, maybe whatever the lecture is going on for the pace of time, you should enjoy these problems, how they are solved. And most important question I am asking to all of you, do you know rebate under section 87A is allowed only to resident individual? तो नॉन रेसिडेंट की इनकम 4 लाख है तो उसको रीबेट मत देना. Second thing is, we have basic exemption for individuals 2,50,000. For a senior citizen, 60 years and above 3 lakh. For super senior citizen, 80 years and above 5 lakh. This seniority benefit is not given to non-resident. So a non-resident of 82 years paying tax in India will end up paying how much tax? Basic exemption kitna hoga uske liye? 2,50,000. These are very small pitfalls, but be careful. Non-residents are not allowed many deductions. Non-residents are not allowed seniority benefit. Okay, normally ATD Mediclaim is 25,000. For senior citizen, it is 50,000 allowed maximum. But for parents, dono, father, mother mila ke 50,000 limit hai. But if the senior citizens are non-resident, how much will be allowed? Only 25,000. Right. So check with me again what I was reading for all of you. Yeah. How much is the income in India? 3,25,000. Foreign country में 7 lakhs. And foreign country में tax कितना है? 20%. During the year she has paid premium 32,000. Okay. Compute the tax payable. Also show how the tax will be payable if there is no DTA and if there is a DTA. So 8th problem I'm sharing the answer with all of you and will give you step by step also how to solve it by both the methods. 8th problem. पहले हम यूनिलैटरल मेथड से करेंगे. हाँ, राइट. यूनिलैटरल मतलब क्या है? देयर इज नो अग्रीमेंट विद द फॉरेन कंट्री. मैम कैसे पता चलेगा? यू हैव टू सेटिस्फाई दीज कंडीशंस यूनिलैटरल के लिए. लाइक फॉर एग्जांपल, Zoyo is a resident in India. Yes. Has she got income outside India? Yes. Taxes paid outside India? Yes. And there is no agreement. In that case, which relief will be given? Huh? Unilateral relief. So let us see in this 8th problem, option 1 के हिसाब से करें. Business income in India 325, in foreign country 7 lakh, 10 lakh 25,000. 80D Mediclaim is actually 32,000, but we are allowing here only 25,000. Okay, so total income is 10 lakhs. On 10 lakhs, tax is 1,12,500. Health and education cess is there. So final tax is 1,17,000. Now, what is the average rate of tax? 1,17,000 divided by what is the total income. Now, when you take total income after deductions, not gross total income. Are you all with me? Gross total income is 10,25,000, but there may be 2-3 deductions. So what is the total income after the deductions? After the deductions, average rate of income is what? 20%. Huh? So now, relief under section 91, that is unilateral relief, will be given when there is no agreement with other country. We have earned income in other country and tax we have paid in other country, but we are resident of this country. Then relief is equal to average rate of tax in India or average rate of tax in foreign country, which you have paid 20%, whichever is lower. So this time, how much is the income in foreign country? 7 lakh. On 7 lakh, 11.7%, whichever is lower, we are giving the relief and tax payable is 3,500. Pause the video, dear students, and one problem you do. Though in regular class we have solved more than 15 problems, but एक अच्छा problem कर लो तो आपको concept clear हो जाए. Now suppose bilateral relief. If there is agreement between the two countries. Income in India, foreign income, 80D deduction, यहाँ तक तो same है, total income. Now, what is the tax payable? Same. Now, whatever tax I have paid in foreign country, on 7 lakhs in foreign country, I have paid 20%. Directly, you take a tax credit. Directly, you take a tax credit. This is the relief given when there is an agreement. But when you see, tax payable is 1,17,000 and foreign country may you have paid 140. So what will be the tax payable? Nil. Ma'am, but foreign tax credit to zyada hai tax payable se. Will you get refund? No. Can you carry forward? No. It will lapse. फॉरेन में आपने टैक्स पे किया उसका हम इंडिया में कहां से रिफंड दें? हमको पैसे आए नहीं, हम कैसे दें? And you can't take tax credit of this. Clear to all of you? This is a very nice problem. Pause the video. Take down this as your notes. Okay. Now I want to share with all of you a small list. Deductions I'll be preparing separate video and I'll give you the PDF material also for deductions. There are so many deductions you have studied in Inter, but some of the deductions are very, very important for your problem solving. So those I have covered here. Like ATC. For individuals, HUF, whatever money they put in LIC, PPF and all. So all that is covered under this. कहाँ गए? Deductions कहाँ गए? Yeah. Maximum limit is 1,50,000. Mediclaim ATD 25,000. For senior citizen 50,000. Parents and all. And I am also senior. My parents are also senior. Then up to 1 lakh. And maximum 5,000 rupees is allowed in cash. You can pay for health checkup expenses, which are inclusive in this limit. Okay. Donations ke liye you get ATG deductions. Now some are 100%, 50%. Royalty. Okay, when as an author you are writing books and you get royalty from foreign country under 80 RRB, royalty income which is brought to India is exempt up to 3 lakh. But this author doesn't mean school books and all, that is not allowed. In that you don't get any exemption. Okay, next is other royalty, patents and whatever formulas and all you have developed, technical know-how, and that you are selling, and you will get a deduction up to maximum 3 lakh. Now this is very popular. 80 TTA says interest on saving account for any SSC. सेविंग अकाउंट कहाँ पे खोलना है? शेड्यूल्ड बैंक, पोस्ट ऑफिस, कोऑपरेटिव बैंक, किधर भी. From your saving account interest under 80 TTA, you get exemption of 10,000. From if the instead of normal citizen, if the SSC is a senior citizen, 60 years and above, then in 80 TTB, interest on the saving account as well as interest on FD, both is deductible 50,000. Here, even if it is an NRI, this seniority benefit is given. So here 10,000, here 50,000. 80 TTA. Ma'am, can we take both? Answer is no. Up to 60 है तो 10,000 saving account interest is exempt. Above 60 है तो saving account and FDs both the interest is exempt up to 50,000. ठीक है? Right. Now, suppose that, dear students, you are getting relief from two countries, country X and Y या A and B, जो भी नाम है. तो एवरेज पहले तो ऑल द इनकम यू टैक्स इन इंडिया. इंडिया की इनकम कंट्री ए, कंट्री बी, विथ ऑल द डिडक्शंस, बिजनेस लॉस सेट ऑफ. नाउ यू नीड टू नो हाउ टू कंप्यूट टोटल इनकम. सो एवरेज रेट ऑफ टैक्स इन इंडिया इज फाइनल टैक्स सरचार्ज ईसीएस के बाद डिवाइड बाय फाइनल टोटल इनकम इनटू 100. Now this average rate of tax and what tax you have paid in country A, whichever is lower you give the relief. This average rate of tax and tax whatever you have paid in country B, this. So two reliefs country wise will be given and not a single relief. To check this, I have good problems here. Any one of it, double relief के साथ 2-3 problems है, तो आप कहीं के भी कर लो, no problem. टू कंट्रीज. चलो 10th वाला भी do. पहले भी आ चुका है एग्जाम में. ये देखो, Arjun, an individual, is resident in India and he furnishes you the details of the income which he has earned in India from country X and country Y. India has not entered into the DTAA. Okay, right? So DTAA नहीं है तो कौन सा relief दोगे? Unilateral relief of 91, whichever is lower. So income from profession, business head में आएगा. Agricultural income from abroad, country X, taxable, and income from other source. Dividend from country Y, taxable. Royalty income, taxable. Expenses of royalty उसी में से minus हो जाएंगे. Business loss country Y में है, लेकिन जो इंडिया में loss है उसमें can you set off this? Yes. Rental income from foreign country you have received 2,40,000. That's your GAV. Municipal taxes allowed, you get NAV. From NAV 30% standard deduction you have to give, even if they don't say. Okay, right? So this is the 10th one problem. Figures I hope you have checked. Take a screenshot if you wish to. Pause the video और इसको notebook में करना. In this, I think almost like how much time is over? 45 minutes. आपका पूरा DTAA कवर हो जाए. Like I said, foreign tax credit you can set off only for tax and not for interest. Those kind of questions they might ask you in MCQs also. So 10th problem, let us check in our notebooks. Yeah. See, always you have to write head-wise salary, house property, business head, capital gain, other source. So how much is rent received in India? 2,40,000. Municipal taxes दिया है, NAV आ गया 2,30,000. Less standard deduction is how much? 30%. 30% of the NAV. So finally, we are paying tax, rental income 1,61,000. Business income in India is there, but foreign country में loss है, वो set off हो जाएगा. Agricultural income in India, dividend in India, royalty in India. Royalty में related expense are allowed. Now out of gross total income, dividend income pura taxable hai, that we have done in business restructuring video. All the kind of deductions are taxable, and only if it is a corporate, yahan to SSC is individual. If it is a company, they can claim deduction ATM mein, dividend received or paid, whichever is least. So यहाँ पे royalty you have received 550. So under 80 QQB royalty का एक deduction मिलेगा, and your total income is 12,96,000. ठीक है? On 1296 tax you have to calculate. Now relief तो working note में है. अब ये देखो, what is average rate of tax in India? 2,09,000 divided by 1296 into 100. What is average rate of tax in country A? 10%. So whichever is lower, you have to give relief. But 10% on not country X का income. Country X में agricultural income हुआ है 50,000. Royalty you have got 550. But out of that 3 lakh deduction भी तो लिया है ना royalty का. So what is the net income from foreign country after deductions and set off? 3 lakh. So average rate of tax in India and in that country 10%, whichever is lower you will give the relief. Now average rate of tax in country Y is India में कितना tax pay कर रहे हैं 16.15 और Y country में 25, बहुत ज्यादा pay किए, तो how much relief will be allowed? 16.15. But you have earned in country Y 161 and 150 income, and country Y there's a business loss also. So on net income from country Y, give them a relief. So like this, total relief from two countries is 69, and that's what you are reducing. Clear to all of you how I'm doing the, yeah, same kind of problem. Average rate of tax in India and average rate of tax in that country. यहाँ तक students बराबर करते हैं, whichever is lower. But lower they give directly on the 5 lakh and 7 lakh, which is wrong. 5 lakh if I have received foreign countries income, 3 lakh 80 QQB deduction I have claimed. So what is net taxable in India? Multiplied by whichever is lower rate, that much relief is given. Clear to all of you, right? Okay. So that's all for DTAA. Keep working very hard for your exam. You're like already vibrating at a very higher level, you know. You're not a foundation and inter student. Turn back and look how raw you were when you were in foundation. A lot of maturity, smartness. You know yourself that मेरे लिए सही time क्या है, रात में पढ़ना है, सुबह पढ़ना है, क्या करना है. So go with your nature. Do the best hard work. Watch this revision video 2 to 3 times. Take down running booster notes wherever I have given. And look up to this channel for the next revision video coming. That is for equalization levy, non-resident, transfer pricing, and so. Right? Thank you so much for watching this till end. Do share this with your friends whom you feel this will be helpful. So many students I feel they're doing self-study. So I hope if this is helpful, please comment below. That will motivate us on this weekend sitting and recording these videos. Right? Thank you so much. All the best. Bye-bye.